Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Happy Friday, everybody. I hope you've had a fantastic one so far. Today, we're going to be diving into our daily cryptocurrency market update, and we're going to be reminding people of our outlook for the short-term time horizon. We get more and more data as the days go on, and this is all sort of feeding into what is already a cautious narrative that I have. We're going to be bringing up the long-term regression bands for Bitcoin. We've highlighted this, but what we've actually done here is we've added in the 200-day or 3-day in this case moving average and the 50-day moving average, because we're looking like we're going to go into a death cross here, and we're going to show you, coupled with where we currently are in regards to the market, we're going to show you what typically follows, and we're at this kind of crucial midpoint of these regression bands. And I can't see strength coming in, for Bitcoin to sort of invalidate the downside short-term risk that I see. It has to do something spectacular in a short period of time. And there are some catalysts that may actually back that up, such as the fact that we've got the interest rate hiking cycle. It's pretty much priced in that the interest rates next hike in terms of basis points is going to be 50. The prior one we saw was 25 basis points. And the thing that I think would really pump markets, not just the crypto markets, but the equity markets, which we're going to talk about in a second, because we still have an outlook on that. Yes, we have seen an upward tick for the equity markets, really a bounce, a dead cat bounce is what I think it is, because we got this rally on the back of essentially negative GDP for the United States, and lots of stock futures, or stock earnings I should say, were well down. So there's no reason in my opinion for the S&P to bounce, the Nasdaq to bounce, other than potentially they're being counter traded at the moment, and you've got people sort of counter trading these. So we're going to talk about Bitcoin. We've covered a lot of what we're going to get into in this video. And then we're going to talk about some news, because we highlighted yesterday, yes, we're very cautious on the short term, and we're just warning people about that. I want to be as real with you guys as I possibly can. I'm getting sick to death, and I'm actually, calling out, and if you guys follow me on Twitter and follow me closely, you'll notice that I'm actually calling out a lot of these people who are putting charts on, and they're comparing it to charts in the 1900s and, the Dow Jones in 1920 or something like that. They're not taking, it's a very narrow-minded way of viewing things, because there's more factors at play here than just looking at two charts, looking at potentially the fact that they look similar and that there may be a chance that they play out in the same kind of fashion. That doesn't typically be the case. Yes, patterns can repeat, but given the right criteria, and that criteria isn't present in my opinion. But despite all of this negativity, Goldman Sachs offers first Bitcoin backed long or loan as Wall Street embraces crypto. We also had the amazing news about Fidelity and BlackRock, by the way, and the fact that this didn't move the market. It's very esque of a downtrending market. It's very, through 2018, 2019, when I was holding on for dear life and actually accumulating, we got amazing news throughout that entire time period. And that's what sort of led me to continue to hodl. But ultimately, it didn't move the price. And it's very telling that we're getting all this amazing news and it's not really doing anything. So the overall market is continuing to slide, seeing general weakness. Very interesting how we saw an uptick for the likes of the Nasdaq and the S&P. This is a simple example of the fact that these markets can move out of sync, but generally they're very linked at the moment, if that makes sense. So there are fundamental reasons why one might see a spike and one might see downward action, but generally they're on the same sort of route, given the same actors involved and how they're taking risk off the table. And in a risk-off environment, what these fund managers do is they take risk from everything. Crypto market, the equity market, anything that's risky in terms of, the macro environment and how that may affect it, they'll take that off the table. So there is potentially a saving grace for Bitcoin, and that could be the fact that we may only get, but it's a very, very slim chance, a 25 basis point rate hike. That would see markets, in my opinion, run. They could pivot on that given the GDP stats that we got for Q1. However, they're still trying to combat inflation, and the Fed have really backed themselves into a corner right now, and I think they're going to have to go through with this kind of... I've been listening to somebody this morning, I can't remember who it was, talking about how we've gone from... We're entering a very aggressive rate hike cycle that we haven't seen since sort of Volcker. those of you who've been in markets for a while, I mean, you know, this all took place really when I wasn't in markets, but certainly learning about history will give you a very clear advantage when you're looking into the future and what may take place. Because scenarios do play out. Charts that just look similar, you know, and you saying they might play out again is nonsense in my opinion. And I think it's foolish to tell people and not be honest with people about what's on the table right now. Long term, nobody's more bullish on the crypto space than I am. Short term, we're very cautious given everything that we're seeing. And we showed you these regression bands. If you look at where Bitcoin currently is, we're right on it, ladies and gentlemen. We've actually retested off it. So we're kind of bouncing around it, which we've actually seen previously. And we've also seen it over here. You can see these tests of it. So to me, I would say a failing of that is coming. I'm not calling for a spiller or a slammer all the way from Alabama necessarily, unless we get some sort of a deflationary event, which could be on the cards. You also have, we've added in the moving averages here, the 50 close and the 200 close. You can see this def cross occurs, and then you get further downward continuation. You have one over here, very similarly to the one that you had in 2014, 2018, and currently you're looking like you've not had one yet, but Bitcoin would need to see a rally. And I think the only saving grace for the cryptocurrency market and the equity market at the moment would be if the Fed renege on their 50 basis point hikes and actually look to only up interest rates by 25 basis points instead of 50, which looks pretty much impossible in my opinion. And also, we've got a very weak equity market. You know, we know, and I'll refresh your memory on this, we're going to be using our friend, the Market Snipers, Twitter to highlight this. This is what he's calling for. The NASDAQ Composite Index, head and shoulders. You also have the S&P 500 ETF Trust, the S&P essentially, the Dow Jones. And then, of course, you have the iShares, iBox, high yield corporate bonds. So bonds are continuing to slide, and they actually can't step in with bonds like they previously had and support them. So it paints a negative picture on the short term, is the truth. That is the fact of the matter. You know, we're not going to beat around the bush here and tell you anything other than the truth. But long term, we are still exceptionally optimistic on the crypto space. And the fact that equities rallied on the data we got about GDP, and also we've got a lot of earnings that were huge. I mean, lots of earnings were massively down. We're seeing stocks individually sell off as a result of this. And it's also suggesting a slowing down in the economy, which kind of suggests a bit of a stagflationary environment, in my opinion, given the fact that I don't think they're going to be able to really tame interest rates. Rather, they're just going to dampen demand and kill off growth as a result of it, whilst we have sky-high interest rates, which I think is very interesting. You know, the good news about all of this is, and yes, we sound doom and gloom, is there's huge opportunities at hand, guys, and we've been dropping some of them on our Twitter. You know, we looked at Chainlink, even XRP, and I have a very love-hate relationship with XRP. I've been holding XRP for 5 years now. I have a very nice bag of it that I rarely talk about. The reason being, it's just been a frustration. It's been frustration after frustration, and there's this kind of cult-like community around it, like there is in all crypto communities, that just fail to see the fact that it has underperformed. That doesn't mean that it's going to continue to. I actually am quite positive and have buy zones for it, even though I already hold a lot, given the fact that, you know, the lawsuit may not do too well, and we looked at Chainlink and a number of other things. But we'll be getting into all those moving forwards on this channel, so make sure you guys hit that subscribe button and click that notification bell to not miss any updates, because we want to give you guys... I still think crypto offers the biggest ROI potential in the entire investment landscape. Bold statement to make, but over the long term, it's proven to be that, and I think even in the short term, and not short term necessarily, but mid term. And what I mean is, I think actually we could come out the end of this. We could come out at the other end of this, and kind of what I'm not hoping for it, because you guys remember I'm still 75% in crypto. I'm 25% or over 25%, I would say, in stable coins. I'm looking to accumulate, but I still hold all my crypto for the long term. I would like some sort of capitulation and then continuation. I don't want this, you know, long drawn out. I think there'd be a lot of people, if Bitcoin sort of spilled, certainly down towards the lower side of 30K, that would be willing to come in and accumulate. And you know, we're really looking for a decoupling, and there is the chart that I'll probably talk about in another video, because we've got quite a lot to cover in this one, where you actually compare Bitcoin against the NASDAQ composite, and it actually doesn't look too bad. It does look like continuation will ensue for that, and Bitcoin will outperform the NASDAQ, and that's the decoupling moment. But the equity market looks weak, and like I say, the fact that we rallied on the back of a weakened GDP, for me, doesn't fill me with confidence. That's people counter trading the trend, and being contrarian in regards to trading, and it's a weak rally. You've got a lot. I mean, I'm getting super annoyed on Twitter. I think it's very unfair. And the thing is, I can understand if people are willing to have a reasonable debate about it, but there's just no reasoning whatsoever with these people. They're just, you should always be able to change your opinion when new data presents itself. Again, still very bullish long term. Short term, I just think we're in for volatility. And we have been warning people about being cautiously optimistic on the crypto space for a while now. And certainly these daily cryptocurrency market updates, the reason they really started was to cross-analyze the cryptocurrency space with your macro markets, because then you'll get a better understanding as an investor, as often the answers to what's happening within the cryptocurrency market lie elsewhere. Let's move on to a bit of news now, guys. A bit more positive. Goldman Sachs offers first Bitcoin-backed loan as Wall Street embraces crypto. Goldman Sachs has offered its first Bitcoin-backed loan, showing further signs of increased interest in cryptocurrencies from Wall Street institutions. Trend that we're just seeing grow. We had Fidelity offer it to people's 401ks. Bitcoin is coming for your 401ks. We had BlackRock, the largest asset manager in the world, talking about crypto as a mega trend. And that's what it is, guys. But short term, it can get thrown around with the macro tide. And that's what's happening right now. We will see continuation eventually. But we've just got to get through these sort of trying time periods, I think, for most, before we get that and we can kind of really embark on the journey that we're on. As Eurozone inflation hits record high for the 6th months in a row. Europe, I think, is in trouble. And I don't say that lightly because I have family in Europe, in all different parts of Europe, an extended family. And I think the Eurozone is in big trouble because these guys are still stimulating their economy. They're still giving out stimulus. They still have negative interest rates. They are talking about upping them, but it's just not a pretty picture. And you can actually see this, I think, predominantly in the DXY chart, which is pegged mostly against the euro and how weak it is and just how far we've seen the dollar run, which we also highlighted as well on this channel. So that's really all I have for you in this video, guys. I don't want to sound doom and gloom. I just want to make sure that you guys are cautious and prepared for whatever may be thrown our way. Like I say, we could get an interest rate miss in terms of they only do 25 basis points. And I think equities and the cryptocurrency market would really rally on the back end of that. But we will see. I think commodities right now, as a quick point on them, is setting up for more continuation eventually. So that is really all I have for you in this video, guys. Again, if you've enjoyed this content, a like is always appreciated. So is a comment, and I look forward to seeing each and every one of you beautiful people in the next YouTube video. Thanks a lot for watching, guys, and I'll catch you all in the next one.